Hi, everyone. This is Jason Burack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Instead of the normal interview format, Eric Dubin of News Doctors and Silver Doctors, you've also heard him on here in other podcasts. He has a long, extensive bio. Him and I are trying out a new type of news wrap where we go through some current events and things that we think are affecting markets that the mainstream media isn't properly covering. So this is our first show for this. We haven't fully actually decided on the name yet. We'll decide on the name later. But I think you guys will really enjoy this. So, Eric, let's get going here.
We can have a contest and give somebody a Silver Eagle if they come up with a great name.
That's not a bad idea. That's not a bad idea. And you know what? We'll get some more responses underneath this video then. Okay, well, Eric, you wanted to talk about the precious metal market briefly. You told me in messages earlier this week you think the market's just becoming very predictable with a lot of the computerized trading algorithms?
It frequently is very predictable, in particular how the cartel works. This past week we saw a period where, or I should back up, a 2-week period we saw earlier, a lot of momentum's coming back into the market, the paper traders on COMEX pushing prices higher, and for a 5-day period of consecutive higher prices, which is very rare, we saw gold and silver make pretty decent moves after people were rather despondent about a month ago. We keep going through this cycle of, we're going into the January 22nd high and people coming back into the markets after nearly 4 years of a bear market cycle and everyone being enthusiastic in January, and then boom, the paper traders were attacked on the COMEX and the LBMA, and the cartel does what it does. And some people still harbor this rather peculiar belief that there is no manipulation in the gold and silver markets when the Federal Reserve and the ECB and other central banks, Bank of Japan's buying basically all issuance of bonds that come out of Japan. We live in a world where it's openly taken for granted that we have massive manipulation in some of the biggest markets in the world, the bond market, the stock market, etc. Yet for whatever reason, a good deal of people have a huge problem when it comes to dealing with their normalcy bias and recognizing that without the manipulation of gold, it's pretty hard to manipulate interest rates. And if you are not trying to manipulate interest rates, then how do we live in a world of financial repression? It's just, for whatever reason, some people are resistant to this understanding and the huge amount of documentation, frankly, that exists that proves that central bankers are manipulating gold. But anyway, that's a big tangent, and anyone that cares to go to gata.org and look through all of their dispatches and document history trove, it's just overwhelmingly clear that central bankers are manipulating gold and silver. So, in the last 2 weeks or so, it's been very interesting to watch the trading. We have had a period where 2 weeks ago we started a bull market move, roughly, and then the cartel came in and smashed things down when the paper traders began to lose a bit of momentum, and that's exactly what we saw the Friday before this last Friday, and we're recording this broadcast on May 24th.
Yeah, there's a natural bias, and I think it's because of the programming people went through in business classes, in their economics classes, their Keynesian classes, their Warren Buffett type of finance views of finance that gold is a barbarous relic, it has no intrinsic value. People just dig it up, they take it out of a hole in the ground, they then put it back in a hole in the ground in a vault and things like that, and it has no utility. That's what most people on Wall Street will say. But to add to your points there, it seems every time, Eric, that gold or silver are having a nice rally, we just see investment banks, whether it's SocGen or Goldman Sachs or some of these others, come out with really negative research reports about how this gold rally won't last and people should sell it. And then we start seeing articles on CNBC and Bloomberg. They start bringing on these experts, and I'll use that in quotes, of people that gold, there is no inflation, all the stuff that was supposed to be bullish for gold, none of it has materialized, blah 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 blah. The banks are just fine. Look at their earnings. It just seems they just continue to repeat this, and I don't know how many people are actually still watching CNBC, but they keep on doing it with the website on their articles and the guests they bring on and the research reports. And to a large extent, I think it's helped cap a lot of the rallies for the most part, really, since 2011. I know it seemed to even the manipulation, in my opinion, and I worked in the financial industry and I worked at newsletter writer companies, there's just a very anti-gold bias. I was threatened when I was working in a newsletter company. It was a libertarian company originally, and then it changed over the years. And when I was researching gold, my bosses would find out and they would threaten to fire me. So, and I have other friends on Wall Street, Eric, who kind of were in the same boat, like Michael Krieger of Liberty Blitzkrieg,
right,
who was covering commodities, but he wasn't allowed to talk about gold. And, his boss offered him promotions if he wouldn't talk about gold. And, then when they saw that he wouldn't take the promotions in exchange for not talking about it, then, basically he was sabotaged career-wise and forced out the door.
Yeah, gold represents the smoke alarm or the barometer of the financial markets, to quote Greenspan. And it's not...
And Larry Summers.
Yes, and...
You wrote that paper, right, with Gibson's paradox or something?
Right, and, in order to control interest rates, you have to control gold. And if you're controlling interest rates and controlling the competition to financial assets, your financial assets from stocks, bonds, et cetera, are more able to be pushed. I mean, there's no incentive for a typical financial organization like J.P. Morgan to push gold to their clients because shifting monies into gold is a sterile asset. It doesn't necessarily generate commissions once it's in the vault and sitting there. And on top of everything else, in order to keep this current phase of financial repression going with low bond yields and the stock market being goosed higher, it would not serve the interests of the financial elite to have gold screaming higher and reflecting default risk first and foremost, but also possibility of subsequent inflation if we were to have some kind of a domino chain deflationary crash driven by derivatives falling apart as interest rates shoot higher. I mean, we have notional value of well over a quadrillion in the derivatives market, and some, depending on what estimate you look at, 500 trillion or what have you, is interest rate swaps. The lion's share of the most volatile segment of the global derivatives trade is in this interest rate swap market. And if we were to have interest rates normalize really quickly, it could create a domino crash that could take down the whole financial system worldwide. And, with those kind of stakes at hand, people like Yellen and Jack Lew and their compatriots in other nations are scared to death of what gold could conceivably set off.
Yeah, I don't think they'll allow interest rates to normalize, Eric, without trying to destroy all their currencies first. And, they have the spin saying, disinflation is good, devaluing currencies is good, it boosts exports, blah, blah, blah. We hear it all the time.
Sure, but they don't always control stuff, and that's the real risk. We saw earlier this month that freak out in the German bond market. I think it was May 8th, if memory serves correctly, where in a 24-hour period, the 10-year bond went from 5 or 10 basis points to almost like 80 basis points. And then all of a sudden, probably the Bank of International Settlements and the ECB came in and just squashed the market down and pushed the yields back down and then put in a bid for the German bond to support the market. But all of that kind of crazy flash crash type action just speaks to how unstable the markets have become given this long multi-year period of jacking up the financial markets and pushing down interest rates.
Yeah, and QE continues to go global. China is talking about doing their version of financial repression and quantitative easing, where they have potentially failures on municipal bond debt, and there's most of the banks in China, for our listeners who are not familiar, the Chinese government owns most of the banks, so they dictate the policy for their banks. And it's looking like the Chinese government is going to order their banks to start buying up this municipal debt to force the duration of the bonds, the municipal bonds issued, to go longer and to force down interest rates. So by definition, that's financial repression in China. Looks like China is going to get into the financial repression game too and join Japan, join the United States, join the United Kingdom and Europe in the financial repression game, which means, issuing more currency to buy up bonds, aka monetizing debt.
Yeah. And we've seen a pattern as well of rotation between major central banks over the course of the 2009 to current period. And it would make sense that China would step up to the plate and be more aggressive with QE now because it would fit in with the rotation that we've already seen. So I'm not surprised that this is happening, and I expect it also to come in the context of them trying to goose their financial markets higher, in part because it'll make them look more attractive on the international stage for their goal of being included in the SDR basket. And the other things that we should look for in the next 2-3 months would be further liberalization in terms of their capital accounts and allowing more international monies to invest directly into the Chinese markets. The thing that we can look at in the near term and that has been reported on speaks to direct commodity purchase relationships being established with investors and being able to go through Hong Kong. But there's going to be a heck of a lot more. And frankly, I wouldn't be surprised if they depeg the renminbi from the dollar later this year in combination of a gold announcement holding that is most likely going to come in above Germany, at least in terms of how I'm looking at it. I mean, there's a lot of people that are speculating that there'll be a gigantic announcement of upwards of 20 or 30,000 metric tons coming out of China, but I don't believe they're going to be dropping that kind of a bomb. But most likely we'll see China depeg from the dollar and declare something on the order of more gold holdings than what Germany has declared publicly, and probably somewhere below 4,000 metric tons. And all of those developments are going to be tied to their QE as well. So they're seriously interested in boosting their economy and trying to deal at the same time with the asset bubbles that they've created that you mentioned earlier, particularly in real estate.
Yeah, I think if every government could get away with it, Eric, I think they would do financial repression, but really only the really major economies so far have been able to really get away with it for so long. But I think, every government would want to do it where they could just issue more and more bonds at lower and lower interest rates without having market forces to it, and they could keep issuing more and more currency with and then use the official government data to say, oh look, our GDP is benefiting, it's not causing any inflation. Oh look, we've made this perpetual motion machine where we could issue more and more bonds at lower and lower interest rates, create more and more currency, and not cause any bad inflation at all. So I think that this is a fantasy game. It's an illusion that these Keynesian central planners, mostly in the West, are playing right now, although China seems to look like it's kind of going that way. But it's just really amazing that they've managed to keep things going for this long. But I guess the people who thought the system would collapse prior to now, all the infrastructure wasn't in place really prior to 2008. I guess it was really 2008 when things were collapsing that woke up the rest of the world, I guess the G20, the developing world, that, we need to start putting alternative systems in place because we can't fully trust the U.S. anymore. And with that announcement here about the new physical gold fund out of China, we've seen some quotes there from the past about, we can't trust the U.S. government anymore. They're hypocritical with their foreign policy and all this other stuff.
Yeah. Well, and on top of everything else, ever since the 2008 crash, we've gone through a period where I think it's fair to describe U.S. foreign policy as being more militant. I mean, you certainly saw militant disposition towards the Middle East, particularly after the fall of the Berlin Wall and the absence of a Soviet Union to check the expansion of power of the West. The U.S. has been more aggressive. But, when you look at the financial crash and what's happened since then, we have this kind of skirmish going on with Russia in Ukraine, and the Middle East is a complete disaster. I mean, basically, as Pepe Escobar describes it, we have an empire of chaos, quote unquote, as a foreign policy. And I think that's actually pretty apropos. He nails it in terms of what our quote unquote strategy is, and it has essentially been to try to stir up as much crazy fighting within factions and religious groups and sectarian fighting in the Middle East such that we can redesign the map and control that whole area. And the amount of flux that's going on a geopolitical level is directly related to the diminishment of the dollar status as reserve currency and the overall control and power that the United States has been able to wield as a uni-power, a single global power. And as our economic base and military base has been challenged, there's been this rapid rise of the BRICS countries led by China, but also, very importantly, with Russia and China having a very deep strategic relationship that's counterbalancing this uni-power world of the United States.
Yeah, and Russia seems to be, wanting to help Greece. I guess Greece has got an invitation to join the Asian Infrastructure Investment Bank. Russia has offered it a pretty large and lucrative pipeline deal to move some gas through it, I guess.
Yeah.
So you're starting to see the people who are kind of diversifying away from the U.S., try to help out Greece, because I think they realize that the European Union and the United States don't necessarily have Greece's best interests at heart.
Yeah, and actually it was an invitation for the quote-unquote New Development Bank, which is the goofy name for what was once known as the BRICS Development Bank. And so Greece would be the sixth member in that club. So many different organizations, it's pretty easy to lose track of which organization is doing what. But this quote-unquote New Development Bank is even more significant for Greece to get a seat at the table, because they're early on forming the core of what this institution will eventually grow to be. I mean, the World Bank today has membership of over 100 countries. I don't remember the exact number, but at some point in time, the New Development Bank, quote-unquote, will in fact be something similar to the World Bank. It'll extend far more than just the 5 members, or maybe 6 if Greece were to accept. But the bottom line is that the pressures that Greece is facing is probably going to end up having it land in the lap of Russia and China first and foremost, because the West is busy making war on Greece. It's a strange situation, because the general public is about 65% in favor of sticking with the euro, because they remember the period of the 70s and 80s with military dictatorships and hyperinflation in Greece, and they do not have fond memories of their savings going up in smoke. But the reality is that their savings will probably either get directly tapped when the banking crisis eventually unfolds, because Greece is technically insolvent and they are going to default at some point. We have this June 5th deadline for about 300 million euros coming due, and then later in June there's 2 other tranches of debt that are coming due, so there's a total of 1.5 billion euros that are due in June, and Greece doesn't have the ability to pay for it. So there's only a certain number of things that can happen. The most likely thing I expect to happen is that the Troika, which we're not allowed to use that term anymore, I guess, but the main organizers of the creditors are going to demand that Greece makes payment, and Greece will not be able to make payment. And what I suspect is going to happen is already been leaked in a couple of circles, and that's that they're going to kick the can down the road in terms of defining it as a default, but one which will be dealt with 3 months later. As crazy as that sounds, that's probably what's going to happen within the next 2 weeks, or 3 weeks' time. Greece will most likely default, and they're going to figure out one way or another, whether it's that particular scenario or some other scenario, to kick the can down the road.
So to use an analogy, then it'll be kind of like with the housing bubble when it collapsed, how someone got their house foreclosed, but they were still allowed to live in the house and take care of the house then?
Yeah, that's a very apropos analogy. They just don't want to deal with the political fallout, because they're terrified of people in Greece ultimately saying, okay, forget it, we're just going to exit the Eurozone and go back to the drachma and do business relationships with Russia and China, who are willing to catch us as we fall into the debt bottomless pit.
Well, Jim Rickards, I follow his Twitter feed pretty extensively. He put out in the last 24 hours, I would say, some stuff on Greece. He thinks that the European Union, the ECB, will fully bail out Greece.
Yeah.
So we'll have to see if that ends up happening. Jim Rickards tends to have some pretty prescient calls about a number of things going on, because he has really good contacts in the political and banking community. So we'll see if he ends up being right on that or not.
But do recognize that he's been saying the same thing for a year. And every single time we see a can kick, it gets harder to kick the can down the road or to ultimately bail out Greece. So,
I mean, Greece.
Time will tell where this goes.
Yeah, I mean, Greece was subsidized just to join the euro, and Goldman Sachs had to fake all their financials, right,
Yeah.
with currency swaps and other stuff just to make them qualify in order to join the Eurozone, right? So, I mean, Greece was subsidized from the very beginning. It shouldn't have been in the euro in the first place. But then again, Eric, I don't think the euro was a good idea in the first place to combine all these countries, considering their past histories of not being able to get along.
Yeah, and the whole Euro project began at a far lesser scale. I think there were 6 countries originally in the coal and steel tariff union back in the 50s, which was the core of what became the Eurozone. And Nordic and Germanic nations have a culture that's more appropriate for sound money and more responsible fiscal spending and whatnot. And when you try to mix in different types of cultural history and legacy with other countries like Greece joining the Union, it was doomed to fail. And they purposefully skewered the economic position of Greece to get Greece in the euro, as you noted. I mean, if you're going to try to hide what problems exist with a deficit-based economy that needs to run high just because of all the social inefficiencies with government spending and so forth that existed in Greece when it came into the European Union, then it shouldn't be any surprise that we are now in a place where Germany is a very different country than Greece.
Yeah, I mean, everyone's got a debt problem, but Germany just produces a lot more. They're focused more on manufacturing and developing new products and services. They have a lot more well-known companies. I'm not really sure I can name any, except for some of the shipping industries. There's not any really big-name Greek companies that most people would recognize off the top of my head, whereas, Germany has many of them.
Right.
Well, transitioning topics here. I think we covered Greece pretty well. I want to go back to the oil market. We had a number of people on Wall Street when the oil price was around 40. They were just looking at the chart or whatever other fundamental news, or they thought was good fundamental news, and they were saying, oil's going to 30, oil's going to 20, whatever.
Yeah, and you calling it 10, 15.
There was even one analyst. He wrote for a Forbes article. I think it was the Manhattan Institute. I don't know how this guy still has a job. He must be paid off by someone. But he was saying the oil price would never go above 50 again.
Well, I mean, there's a possibility that we will see another downdraft if a few scenarios take place. The chief one among them is, problems in the derivatives market leading to another 2008, 2009 style scenario where demand destruction steps in and people are just scared to death of deflationary crash. But, on the flip side of that is going to be the response to that problem by central bankers, and we know how that will roll. And oil will play a pretty decent hedge value and insurance value. I mean, owning, just for the sake of conversation and being boring about it, I mean, just having positions in the majors, the ConocoPhillips, the Exxons and Shells, et cetera, of the world, they pay decent dividends, and you'll be able to transition through even a currency crisis or a currency reset, theoretically. The majority of the value of the equity of those companies is built upon the long-lived infrastructure that they have and their refining assets and drilling equipment, et cetera, plus the resource underground. And in this day and age, given the value that is out there in the energy sector, I think that's one of the places that people should look to sniff around investment opportunities, not just for the sake of possible appreciation, capital appreciation point of view and attractive dividend yields, but for the value of owning an asset that can transition through even something as cataclysmic as the very nature of the dollar being redefined, because at some 6-month forward basis, when companies come out on the other side of that kind of a transition, they're going to be earning their cash flow in whatever is the new currency of the world. So I've encouraged people to think about oil companies as another alternative asset that can have insurance value, and in particular having the shares held outside of street name. A lot of the majors will, in fact, allow you to buy shares directly through their registrar, like CompuServe or whomever the corporate registrar is for the treasury of the company itself.
Yeah, I think oil's a very good inflation hedge over the very, very long term. A lot of the oil-producing countries, especially the Middle East ones, whether it's Saudi Arabia or Qatar with their natural gas, or Kuwait, they like buying oil. I mean, they like buying gold, physical precious metals, with their oil profits. So if there is a currency crisis, Eric, with the dollar or the euro or any of these other currencies, we could see these oil-producing countries start to say, well, you know what, we're going to only start accepting maybe either other currencies or a certain amount of physical precious metals. You're going to have to pay 10% in the amount of the payment in metal then. We may see that down the line in the near future.
And there's a historical precedent for OPEC in particular playing games with the oil market vis-a-vis in relation to what was then the overwhelmingly dominant U.S. dollar position in global trade in the 1970s, when there was a huge amount of turmoil with the dollar and the dollar being debased, and France in particular, but other countries as well, pulling gold out of Fort Knox and out of the New York Fed by making a tender offer at the New York Fed gold window, and ultimately Nixon closing the gold window. We had all of that turmoil ultimately push Nixon and Kissinger to make deals with Saudi Arabia and other countries that are oil producers to allow oil to rise in price to compensate for the lost value of the dollar. And that historical relationship will play out again, whether it's driven by markets overall reacting or whether it's something that's more coordinated from a political point of view. If we have a currency crisis, oil will respond and will be a means of protection, a means of inflation hedge, as well as just the purchasing power of oil as one of the most important commodities in the world will surface itself out in terms of the equities. So, I mean, we're living in some pretty bizarre times. There are so many instabilities in our financial markets from so many different directions that people need to think more along the lines of preservation of capital first and foremost before even trying to figure out how to make money in the markets, because the markets are so distorted and so bastardized by the massive amount of manipulation.
There's not a lot of bargains. Yeah, it's just, I'm a value investor, so I use I look for valuation metrics, and there's just, there's a lot of dividend stocks that are selling at 20, 22 times forward earnings. These are conventional consumer staples. That's not a bargain to me. I mean, if something was paying out a solid dividend yield and it was a solid consumer staple business where someone bought most of the products almost every day, and the stock was selling at 9, 10, 12, maybe 13 or 14 times earnings, it would look like a reasonable bargain. But at 20, 22 times earnings with no real revenue growth, Eric, that's not a bargain to me. I mean, they're using financial engineering to make their earnings go higher, using share buybacks, and the corporate executives are playing games to beat the earnings bar so they can trigger their stock options and cash out.
Yeah, I agree.
But the oil market, to me, Eric, the oil market, the price just went down and down, and people were looking at the chart. I think we've had a very large short squeeze here because everyone was so negative. I mean, most hedge funds were all short. A lot of people were short. So we had a really nice short squeeze here, which was good if you did buy the dip. I know a lot of people were angry at me for saying that it was a good bargain back then. Oh, the global economy is going to crash. I was like, look, the production costs, the Saudis could afford the lower oil price around 40 for a little while, but almost everyone else was losing massive amounts of money, the oil, unless they were hedged with their production costs. So we didn't see a lot of shale oil producers go bankrupt at $40 a barrel oil because the oil price didn't stay there that low. So we didn't have big loan defaults yet from the banks that issued the loans to the shale producers. But if the oil price does go back down to 40, they were able to issue, emergency debt and emergency equity at kind of penalty rates this last time, a number of months ago, to try to, buy time for the oil price to go back up. But if we do go lower again, I don't think that debt and equity is going to be available to the shale oil producers that are higher cost that have debt the next time. So we could have a pretty big wipeout, and the majority of oil production, Eric, all over the globe, whether it's, oil sands or deepwater offshore or shale oil production, these are unconventional ones, the majority of that production is not really economic below $60, $65 a barrel. So eventually, maybe we will retest lows of 40 or maybe go even a little lower in one more spike blow off. But then there's going to be some a good amount of supplies coming offline, especially in the U.S. shale oil producers and elsewhere that are higher cost producers.
And at the same time, we have pretty consistent growth in demand. I mean, yeah, we saw a decline largely driven in Western economies in the 2008-2009 crash, but we're already back over 90 million barrels per day usage worldwide, and there's just basic economic drivers with the growth of China and India and other economies where, coming off of a smaller base, the addition of transportation vehicles consuming more oil and just a general growth in the economies will probably push us over 100 million barrels per day growth, or consumption levels 2025 easy, I would think.
I agree. Yeah, we're already projected, I think, by the end of the year to go from around 92 million barrels to 94, and on a percentage basis, that doesn't sound like a lot. Yeah. Because it's only a couple percentage points move, but in the total volume of oil barrels, that's over 3 billion barrels per year of oil that needs to be replaced that the market just doesn't seem to care about. I guess it figures that those 3 billion barrels of oil can easily be replaced. But, when I talk to oil men, Eric, they tell me, it's really hard to replace 1 million barrels of oil.
Right.
So 3 billion barrels of oil per year replaced, very, very difficult.
And we only saw a delta change of like 1.5 million barrels in terms of both the supply contraction and demand contraction within the crash we just went through. It was not predicated on a giant percentage move in the actual changes of supply and demand. So at the margin, when markets are pricing a commodity, it can have a huge impact on just, say, less than 2% of the actual global market moving around in terms of supply and demand. So, if we're going to try to feed the world with oil 5-10 years from now at 100 million barrels per day, that's going to be quite a challenge. A lot of people in the alternative energy world think, oh, well, solar's going to take up a big part of that, and efficiencies and on and on. But the reality is that's, it's not, the numbers don't pencil out that way. We're going to see a lot more demand. And this whole phenomenon of peak oil is real. It's just most people don't understand the fluid dynamics and physics and the mechanics of what actually goes on with oil fields to understand the basic mechanics of peak oil. We peaked at 75 million barrels per day production of conventional liquids in 2005. We've never gone over that level of production, and it requires higher prices for a consistent increase in all these alternative, more expensive sources of fuel to come online. And the reality is that we either have an economy that rolls over and dies globally, or it continues to grow. And so are we going to go through periods of recessions and maybe even a depression built on some kind of derivatives market crash and financial turmoil is definitely possible in the next 18-month window, give or take. But beyond that, if we're going to live in a world where we have economic growth, by definition, that means more consumption of oil.
Or energy, yeah.
Energy, the correction is well warranted, but the energy density of oil is such that we're not going to find a replacement for it at a level that makes a material change in the supply-demand metrics in the next 10 years from alternative fuels. It's just not going to happen.
Yeah, oil is just the easiest to store for transportation. I mean, switching to coal, switching to natural gas, I mean, there would be trillions, I think, required in infrastructure investments to switch the U.S.'s car fleet, most of it, to natural gas, to compressed natural gas engines. The U.S.'s desire to export liquefied natural gas, then, if we switched our fleet over to natural gas, that would change quickly. So this amazing new export industry that the U.S. is envisioning would collapse, and we'd have to import natural gas probably because our consumption rate would go through the roof of natural gas. So, I don't think, like peak oil, one of the things that I think people don't understand is they assume that, we're going to run out of oil. We're not going to run out of oil. I mean, people can eventually, if the oil price is high enough, Eric, I've heard people say, asphalt can be turned back into oil. So if the oil price is $200, $250 a barrel, we would start doing that. But, can the consumer afford that? At a low oil price, when gas is $2 a gallon, like it was months ago, a lot of people, markets do work. When the price was that low, the market was going to clear. People were going to start switching to SUVs again, and they were going to start consuming more. because it was cheap. People wouldn't even think really when the gas price was that much lower about filling up on the next tank. But when the gas is, $5 a gallon, people at the margin, the discretionary consumer of oil, may. So, we're the oil era, in my opinion, we're running out of the cheap stuff, like you mentioned. There's a lot more oil to find, but the production costs, I don't know. We've obviously had some good technology breakthroughs with U.S. shale oil and deep water and things like that, but they haven't driven the production costs for oil production, back down to the old numbers that the East Texas, Spindletop or the Saudis used to have. And even the Saudis' production costs over the last 12 years, I think it's doubled. So it's gone from like $9 a barrel for the Saudis up into the $20 to $30 a barrel all in range. So we're not in a cheap oil environment really anymore. Maybe for a couple months, if there's a market panic, but then the market's going to have to go back up again. And I think that's why we're going to have a lot more volatility in the oil price going forward, and there's going to be some pretty wide trading ranges.
Yeah, the main scenario that would be different, it would be another 2008, 2009 style crash. And it would be more than a couple of months. You'd see oil go down and stay down for a year plus, and that's the pattern we saw then, and it could happen again. But beyond that, in addition to all the things that you noted, we have the issue of energy return on energy invested, and it's plummeted. The amount of energy in terms of the amount of oil one needs to use to generate a new barrel of oil is now on the order of receiving only like 2 to 5 barrels of energy for some of these unconventional sources in the shale oil plays. And it's not going to get any better. The Spindletop that you mentioned yesteryear was 100 plus barrels for every oil barrel invested to drill the well and extract the oil. So we're living in a very different world.
Yeah, and look how much more energy, and to add to your point there, look how much more energy we have to use to mine that 1 ounce of gold or 1 ounce of silver or 1 ounce of copper. It's the amount of energy usage has spiked. Steve St. Angelo of SRS Rocket Report does a great job covering this with, the trucks we're using, the earth movers, and how many more tons of uneconomic rock we have to move just to get, some economic ore. The grades have fallen off the cliff. I think that's why, I look at the supply-demand reality fundamentals for gold and silver, and I look at the miners, and most of the economic projects that were brought on since 2009, the feasibility studies, they all needed much higher gold and silver prices than we have now for those mines, and maybe the miners have been able to cut some costs, but there's limits to how much cost can be cut at those mines. Maybe the management teams they can take a salary reduction, or there's selling general and administrative expenses that can be cut, but actually at the mine, Eric, because there's geological limits, because we're mining very hard to find stuff, and the amount of equipment used, there's going to be limits to how much more cost can be cut without actually shutting down a lot of these mines. Yeah. And then look how much of the byproduct of gold and silver, right, is from copper, and the copper prices collapsed. So we know that the copper miners, a lot of them were hedged at a much higher copper price. But when those hedges come off, the gold and silver byproduct, that's going to slow down too, right?
Oh, absolutely, yeah. And even in the 15-some-odd years that I've followed this industry very closely, I've seen the change in the majors, and they would only go after 2 to 5 million ounce gold deposits as acquisition targets, and seek to have grades of above 1 gram per ton. Back in 2000, that was 2000 to 2003 or so, the majors were all thinking along those lines. And there's a funny thing that happened along the way. The world hasn't, cooperated. The number of deposits that are over 2 million ounce discoveries these days are pittance. And it all speaks to what people describe colloquially as peak gold. The phenomenon exists, very similar to what's going on in the petroleum industry. So the expenses are going to rise going forward.
Or peak oil, peak gold. Let's just call it, the end of cheap gold, or the end of cheap oil. There's going to be a new normals established. I don't think people realize how cheap $17 approximately an ounce silver is.
Yeah.
I cover a lot of the silver miners, and there's only 4 tiny primary silver miners on planet Earth, and these are not large producers. Silvercrest, Tahoe Resources, Avino Gold and Silver, Exelon Resources. These are tiny producers compared to the really large ones. The really large ones, the primary guys, aren't making any money. And some of them, Eric, have slashed their costs. 30-40% in the last 18 months. They're still not making money. So you tell me if this is a sustainable market.
No, it's not, and the names you rattled off are something like, what, 18 million ounces a year total? I mean, Tahoe's the largest.
I don't think it's that. I think Tahoe's, what, 6 million ounces of silver a year, and Silvercrest is maybe 3 million ounces of silver equivalent, and the others are much tinier than that.
Yeah.
So it's...
I mean, and we were in 100-some-odd million ounce mining. You know, I mean, silver actually, if you take in its worldwide supply, it's near 1 billion ounces every year. But that most of that is coming out of the base metal Goliaths that are producing copper, et cetera.
Yeah.
So,
and like 200 million or so is recycled.
Yeah.
So about 100-something million, like you said, is primary. And most of the primary stuff is being produced at a large loss, at least a couple dollars per ounce loss, if not more than that. So I don't know the mining people, the mining executives and mining financiers I talk to in Toronto and Vancouver, they tell me the capital is not really available. And yet, we see these people on Wall Street say, oh, the gold and silver prices are going to go lower. The bull market will never start again. So I look at real demand, right, for the stuff. I see there's more solar panel demand increasing, and I see a lot of reasons, and I see demand for physical gold growing out of Asia, especially with this new announcement with China Physical Gold Fund, right? I mean, China and India by themselves were already importing around 100% of annual global mining supply,
more.
And now this new...
More.
Oh, more?
Yeah.
And then, according to Kuz Jensen, I think it's more. But I was being conservative. Anyway, though, this new announcement about the Physical Gold Fund, that's $16 billion with 60 different countries, including China, who want to buy up physical gold and buy up miners. So, I think they realize how that this is going to help transition them to the next system, and they realize how cheap the metal is right now.
Yeah, and it's not likely to fall. I mean, in terms of downside risk for the way investors should look at this, maybe a 10% or so decline is possible, but the upside is tremendous, and the insurance value, more importantly, can't be underscored enough. I mean, we're going through a period where we're likely going to see some kind of an international reorganization of the world currency reserve status system, and that's going to impact the dollar. It's going to impact dollar-denominated assets, and being hedged as best as possible in this kind of very confusing, very dynamic situation is really important for investors or for anybody.
Now, speaking of insurance and protection, Eric, we've seen a lot of this. This is the next topic and last topic, I guess. We've seen a lot of news stories coming out, whether it's government attacking government with hacking. They don't want to fight a physical war. It's the U.S. going after Iran with Stuxnet and disabling their nuclear program. Or we've seen Chinese corporations or Chinese hackers hack into different entities. We've seen so much identity fraud and identity theft. What's your opinion on what's going on in this cybersecurity news here? Is this one of the main stories for people that they need to really be aware of? Because I don't hear most mainstream people talk about this, like regular people on Main Street. I think they need to understand that this is very dangerous and that they need to spend more time and money and effort researching this to protect themselves, so they don't get their identity stolen or anything like that.
Yeah, that's probably a good thing. I mean, keeping track of what's going on with your credit cards, your banking accounts, et cetera, is really important these days, obviously. Maybe services that offer protection and avenues of recourse, including internal staffs with lawyers and so forth, that can help a person if they are subject to, identity theft and having, financial ramifications hitting their credit cards and other accounts. I mean, the credit cards are pretty well protected as far as, the kind of laws that are set up to serve the interests of consumers. But beyond that, I mean, there really isn't that much protection for an individual. So researching what's going on in this market and making sure that they're dealing with their personal finances in a way such that, you're protecting yourself is probably a good idea. In a grander perspective, I think to some extent the powers that be do like ramping up the fear factor of international cyber terrorism as an ongoing problem that needs to be addressed, and sometimes is used as a justification for the military-industrial complex, frankly. I mean, the example that I could point to most clearly was the BS story about North Korea hacking into Sony last year. I mean, it was only a week after that story hit the tape that it was very clear that it was not North Korea involved, as it was most likely in a disgruntled Sony employee who was fired and got involved with some black hat hacker circles on the internet and decided to target their former employer. So there's always that level of the onion. As we peel back what's going on from a geopolitical point of view, sometimes there are quote unquote false flags when it comes to cybersecurity, and we have lots of drills that keep a lot of people on pins and needles and going on frequently, and at some point it might actually be a convenient scenario for the West to use cybersecurity attacks as a justification for outright aggression or war even. So, I mention all this just to have people think about it because there is a precedent for it, and the North Korean example is a good example. But, from an economic espionage point of view, this is becoming far more important these days. And the BRICS countries responding to the NSA's overreach is another great example of how this all unfolds from a political, geopolitical point of view. I mean, the espionage into Petrobras and to other Brazilian countries were directly responsible for Brazil's desire to build their own independent internet backbone. So, these things do have an impact on geopolitics.
Yeah, I just saw a Citizen4 documentary. I thought that was very interesting. It was about Edward Snowden's life. But it just seems, Eric, and you cover a lot of these news stories at the News Doctors, it seems like we're seeing, almost one major hacking story a day, whether it's, one government hacking another or one corporation getting hacked. And it seems to me like a lot of these corporations, which have a lot of our private data in there, I think, a whole bunch of the porn website or porn sex dating website Adult Friend Finder was hacked, and it was found out that there was a lot of government employees on there, spending taxpayer dollars trying to get sex on the taxpayer's dime. So these things are being uncovered, and I think the Federal Reserve also of St. Louis, their bank was also attempted hack. So it just seems like there's so much of this and it's prevalent. But yet, like, a lot of people, just use one password and they log on with the same password on their website. You have to have many different passwords and save them, like, in a program or something that's off the internet, and so many different things going forward. It's just very dangerous out there just to be buying things online now, because you don't know what you click on. It could have something hidden and be very bad.
Yeah, and probably only 10% or so of the people that are using the internet for commerce are, in fact, taking the time to keep like a password file and have a lot of variation in the passwords they use and whatnot.
And they should do that, right? Because if they get identity theft, it could ruin their life.
Yeah. And then the flip side is that companies like Facebook are now being used as the gateway to verify someone's identity, and they have a term in the tech industry for password fatigue, where instead of trying to remember 100 passwords, all you have to do is just have a very secure Facebook password, and then Facebook benefits by being the gateway nanny, so to speak, granting access to the LA Times or the New York Times or whatever you're going on. And Amazon will probably play that role as well in the future.
Yeah, I just wanted to bring that up for listeners out there, because obviously this podcast is going to be put on the internet, but I want them to think about that, all the tech stories that are coming, and how I think underinvested that is. And there's a lot of stuff, Eric, you're in the alternative media. I guess I'm in the alternative media, although I'm not really a journalist. I'm just someone who's pursuing the truth and, looking to invest and protect myself. But it's just amazing, though, that we see these things reported, but I think there's a lot more stories that don't get reported about the amount of cyber attacks, of the Fortune 500 companies. Probably they're being hacked by hackers all over the world, at least a number of times a day. And who knows how many of them have been successful or not. So people, just because something hasn't hit the news doesn't mean that their data is safe and stuff like that. People need to be careful with themselves. So, gold and silver outside the system is smart. It's insurance to protect you. People need to also, if you're going to buy things online on eBay or Amazon or anything, or even on any other websites, you need to be cognizant that people are trying to, because they can't go up to you anymore and steal cash because now there's a war on cash, right? So if you withdraw cash from the ATM, you're not going to be taking out as much. So the criminals have gotten smarter. They've gone to online and stuff instead of robbing you at gunpoint and trying to take your cash, because it looks like the banks don't want anyone to have cash anymore.
Yeah, well, that's another old can of worms, and we can open another show, because the cashless society meme is definitely taking off. I mean, I've always joked that the day that the powers that be figure out how to continue with the black economy of running drugs and all the other things that are illegal that they still base on cash, and how to figure out the transition to a cashless society that doesn't compromise those illegal activities, will be the day that we suddenly see the movement towards a cashless society pick up speed. And I think we're getting near that, that juncture, because there's so much at stake when it comes to the financial community and the financialization of all of our global economy, such that the powers that be make a heck of a lot more money goofing off pushing paper assets as opposed to running drugs. And I mean, drugs are a big part of why the banking system is liquid and fluid. Yes, I understand that, but the importance of, in the minds of the elite, to control systems and see the financial economy expand further, actually has flipped the tables when it comes to being more profitable versus all of these other illegal activities. It's more important to control cash. I mean, for example, this whole cashless society it can form a stopgap solution if we were to have a financial crisis where there's runs on the bank. We already see this actually in Europe. I mean, many countries there are now limiting the amount you can pull out of the ATM, and in part that's being implemented because the amount of cash available within the reserves of the banking system is diminishing.
Yeah, I agree. I think there's actually, Eric, many reasons for why they're trying to go to the cashless society. I could add some other reasons I'm not sure other people have thought about. Look what they did to Julian Assange and Edward Snowden, right? These guys were hardcore whistleblowers. They made the economic and political elites look very, very bad, right? And they were, in very short order, they were completely cut off economically from the system. Look how quickly they were just basically cut off. And if there was no Bitcoin, how would these guys be able to even afford groceries or food or anything?
Right.
So, I mean, if you are a rabble-rouser, right, on a very, very large-scale level, challenging the people, the powers that be, now with this cashless society and how everything's electronic and credit cards and all that, they can shut you off economically from the system very quickly and almost basically ruin your life or make it almost nearly impossible for you to be able to even buy groceries or any of the basics of life every day to survive.
Yeah, the amount of political control that a government can have when it comes to controlling one's use of money is huge, or currency, I should say.
Yeah, and also now, another reason to eliminate cash is with Europe. Europe has such a large underground economy. I believe it was estimated that the European economy was 40% underground and cash only, right? There was a lot of people, illegal immigrants, from Africa or Eastern Europe who were working off the books getting cash that, they want to be able to tax every single transaction and then increase the tax, like a VAT tax and layer on the taxes. So there's so many reasons, I think, Eric, besides just the ones that a lot of libertarians in the gold and silver community talk about for the cashless society. There's so many reasons for why the economic and political elites want to do it. And, of course, I don't think those rules that would, where they can get shut out of the system would ever apply to them because they're above the law or they're writing the rules.
Yeah.
Well, in wrapping up, Eric, I really enjoyed this discussion. If our listeners have any more topics that they would like you and me to discuss for this next discussion that we do, just post or email us, and we'll decide if we want to discuss that topic. But I really enjoyed this. We covered some interesting topics that we don't hear about in other circles.
Yeah, it was a great conversation, and for our listening audience, Jason and I talked about the scope and where we want to take the program, and it's in its initial stages. We'll shape it and based on the feedback we get. But as it stands, we're looking to do stuff that focuses on what's going on during the last week or so when we record, but also from a bigger picture, talk about general macro themes and try to explain the historical context of events that we're seeing unfold and where things may go in the future.
Yeah, and I'll just put like a generic title for this, and if our listeners do want to comment and try to name the podcast, I guess we can offer maybe a Silver Eagle for the best name or something for that. And we'll just name it like episode 1 of Name This Podcast or something like that with the date, and then I'll change it then after someone wins the contest.
Yeah, sounds great.
Okay, well, thanks for your time, Eric, and have a good Memorial Day weekend. Hopefully you're barbecuing out.
I will be at a barbecue tomorrow, so.
Yeah, barbecues are very good. I already have my steaks. Nice. I already have my steaks marinated in beer, so. Okay, great.